Hi, hello, welcome to all of you. This is Dr. Manjunath N, Assistant Professor from Department of Commerce and Management Studies, Government First Grade College, Srinivaspur. This session is particularly designed to BBA 5th semester students of Bangalore North University. In this session, we are going to discuss about the subject called Investment Management. The topic for the session 47 is Mutual Funds, Meaning and Futures. Before going to discuss about the mutual funds, meaning and futures, let us know which concept that we discussed in the previous class. We have discussed about the performance evaluation of mutual funds in the previous session. The learning objective of the chapter is to provide an understanding of mutual funds as an investment outlet and personal finance and investment. Once the student attend this particular session, he will be able to understand the concept of the futures of mutual funds, meaning and all about all the background of mutual funds he is able to understand. Mutual fund. When it comes to mutual fund, it is one such investment instrument in which many investors pool in their finances on trust basis. Yes, this trust is then managed by an highly experienced team of financial experts known as asset management company who further invest this accumulated capital in numerous financial assets such as stocks, bonds, equities, and many more. Moreover, the people who invest in mutual funds usually have one common investment goal, and it would not be wrong to say that the earned dividends from such type of investment is proportionately distributed to the invested capital. Few banks that offer mutual funds are ICICI, SBI, Federal Bank, HDFC Bank, IndusLand Bank, etc. However, when it comes to eligibility and documentation, different banks have different set of norms, so you need to check with the bank itself before you invest in mutual funds. Now let us try to understand that why one should invest in mutual funds and what significance it has. Why you should invest in mutual funds? People prefer to invest in mutual funds for not only one but for many reasons. Yes, because investing in mutual funds is undoubtedly a sensible decision for the reasons which I am going to tell now. The one is investing in mutual funds is nothing less than a professional management of your investments. With having the large pool of resources, the investors usually do not fulfill the minimum investment need that they possibly would in individual stocks. With the help of a professional fund manager, along with a diversified portfolio in asset investments, the risk can be periodically tracked for the financial growth, which ultimately minimizes the chances of losses. Let us discuss about the types of mutual funds. While developing on the objective of investments, mutual funds have following types. One is equity funds. In equity funds, the funds are mainly invested in stocks. Returns are higher in it, but so are the risks involved. Equity funds can be rewarding because The long-term capital gains are exempted from tax. We have another type of mutual fund, debt funds. In debt funds, the funds are mainly invested in government or corporate securities and bonds. Here, investments can be short term or long term, and you will get the fixed return with the lower risks. To save on tax in long term investment, you can avail the indexation benefits. We have another type of mutual fund, that is balanced funds. Balanced funds generate high income from equity as well as steady returns, which ultimately helps in balancing the risk factor from equity. We have another type of mutual fund, that is index funds. Index funds are designed to replicate the portfolio of the market index. You don't need to aggressively monitor them. The risk involved is proportionate to the index fluctuation. Another type of mutual funds is gilt funds. Investment is completely in government securities, where there is no risk involved by default. The value of gilt funds units is dictated by the market volatility. Here, the risk return ratio is as same as in equity funds. The other type of mutual fund is global funds. In global funds, the funds are invested in the assets outside of India. It adds an additional layer in the domestic diversification. It is for those investors who know the international market very well, understand the risk involved. The other type of mutual fund is fund of funds. Fund of funds. Here the funds are invested in mutual funds directly instead of assets. Your investment is diversified in the mutual funds instead of market instruments. The returns will be an average of all the funds. We have another concept to discuss: features of investing in mutual funds. First feature is portfolio diversification. Mutual funds diversifies your investments by investing in different assets classes. As an individual investor, one cannot afford to invest in variety of sectors. Mutual funds offers diversification and exposure to multiple sectors through minimal investments. Professional management. Mutual funds are managed by qualified, experienced professionals who works towards fulfillment of investment objectives of the fund. Affordability. You can start your investment in a mutual fund systematic investment plan with a minimum investment of as low as rupees 500. Liquidity. Open-ended mutual funds can be redeemed totally or particularly at the present value. Transparency. Mutual funds performance is easily available on their own website, as well as performance is reviewed and published by esteemed publications and rating agencies. Rupee cost averaging. Regular investing irrespective of the market trends help you average your investment cost over a period of time. You get higher number of units when the markets are falling. Similarly, if the markets are rising, the overall value of the portfolio increases. Consistent savings help you make periodical and consistent investments. Adds financial discipline into your life through regular investing. Choice of investment. There is a wide range of mutual fund schemes available to meet individual goals. It also offers flexibility in the mode of investment such as SIP and lump sum. In order to summarize this session, a mutual fund is a company that pools money from many investors and invests the money in securities such as stocks, bonds, and short-term debt. The combined holdings of the mutual fund are known as its portfolio. Investors buy shares in mutual funds. Dear students, let us understand these concepts by going through some of the multiple choice questions. So, in order to understand these concepts, I think the multiple choice questions is the right way of just refreshing our learning. The first multiple choice question says, it is one such investment instrument in which many investors pool in their finances on dash basis. We have four options. Option A, interest. Option B, deposit. Option C, cash. Option D, trust. Any guess? The answer for this? The answer is D, trust. So we have another question. Which type of mutual fund carries the following characteristics? Invested in stocks, returns are higher, risk involved, long-term capital gains, exempted from tax. So which type of mutual fund it is then? We have four options. Equity funds. Option B, reserve fund. Option C, capital fund. Option D, compensation fund. The answer for this, any guess? The answer is option A, equity funds. Similarly, we have another question. In dash, the funds are mainly invested in government or corporate securities and bonds. Option A, shareholders fund. Option B, reserve fund. Option C, debt funds. Option D, inflow of funds. Any guessing answer? The right answer is option C, debt funds. We have another question. Dash generate high income from equity as well as steady returns, which ultimately helps in balancing the risk factor from equity. We have four options. Option A, reserve fund. Option B, balanced funds. Option C, imbalanced fund. Option D, government fund. Any right answer for this? Any guess? The answer is option B, balanced funds. Like that, we have another question. Mutual funds are managed by dash, who works towards fulfillment of investment objective of the fund. Option A, qualified HR managers. Option B, qualified technicians. Option C, qualified graduates. Option D, qualified experienced professionals. Any guess? The answer is option D, qualified experienced professionals. Like that, we have many reference books are available on this particular issue. You can go through the books and references in order to understand about the mutual funds, its meaning, futures, all that things you can come to know. So I request all of you go through the references that we listed in the slide. And thank you for all of you for giving me this wonderful opportunity. I wish you all the best. Good luck. Thank you once again. Thank you all.